Hey, good morning, everybody. It is Wednesday, August 5th, 2026. I, of course, am Hammer, founder of Hammer Solutions, home of great products such as Originator, Success, Grab and Go Social, and Rate Sensei. Remember, you can join me live each and every weekday morning, 9:30 a.m. Eastern Time, broadcasting on Facebook and YouTube, talking about what's going on in the markets, rates and pricing, all that good stuff. You see today's lock advice at a glance. It's a little different than it's been, so pay attention. We're going to go ahead and float them all to start. Everything in the morning today, we're going to go ahead and float it to start. However, if we don't see some improvement in bonds, which have started off a little bit weak this morning, if we don't see some improvement in bonds, it's a good day to lock up some of those near-term loans closing the next couple of weeks, as well as risk-averse loans that might be tight on DTI, that kind of a thing. So loans with more time that are closing later in August, September, and beyond, a lot less urgency, a lot less to worry about, though, because we're going to see these rates again. These rates aren't really going anywhere, but we may see some movement in pricing. We've got a pretty good pricing window. You remember last week, when rates were creeping higher, we talked about we want to wait until we get a better pricing window. That's why I've been cautiously floating even through Friday's bad day. So that's where we're at. Let's go ahead and say hi to all the live folks. We got 11 of you on. More will be joining. I know. I'm going back to sending the text out early. So when you get it, hit it. For Sean Segaloff, good for you. Brandy Brickler asked for it as well. A few others. Amy Blauser, good morning. Angela Walters, Eric McDonald, Deb Dickinson. So great to have all of you here. Thank you for joining. So remember, if you would like to join live and not miss a moment of the show, make sure you sign up for our text reminder, hmmr.io/reminder, or use this cool QR code over here, and that'll get you signed up so that you get the text, which goes out within a minute or two after we go live, depending. There's a couple hundred people now that get the text, I think. So that kind of has a effect on all of that. So anyway, good morning. Let's go ahead and let's get started. Good morning, Jerry Simmons, Michael Garcia, Vicky McSweeney. Great to have all of you here as well. All right, we're going to go ahead and jump into the technicals. First things first, let's take a quick peek here. And jumping into the technicals, we're going to start off with a quick recap of yesterday. Yesterday was a fantastic day for bonds. You could see that they improved all through the day. If we take a look at the 5-day chart, let's bump this to 5 days. Yesterday is everything that happened right here between these dotted lines. So you could see that back on Monday, we had a nice kind of improvement early and then just a little bit of a sweep on the day. Tuesday, though, was a very, very strong improvement with bonds basically ending the day very, very near their highest levels right here. And if we take a look at the Japanese candlestick chart, remember, we are looking at this green candlestick right here. The body is the fat part. The top is where we ended the day. The bottom of the body is where we started the day. The wick, this thin, tall, skinny part, like the wick of a candle, that is the highest that we saw bonds hit. So yesterday, mortgage-backed securities, the 5.5 coupon tapped out at 99.67 before ending the day at 99.61. Last time that we saw that was over here. These are red candlesticks, meaning we started the day higher, ended the day lower. And that was about the last time that we saw something that we were up around this level, was around the 20th and the 21st. So this is a good time that we've hit that. The steady improvement through the day was a nice thing to see. The 10-year treasury yield also down quite a bit, 4.63. Remember, that on Friday was up to 4.74. 4.74. We have dropped more than 10 basis points in just a few days and work our way all the way down. Now, you'll see that there is some technical resistance here. This blue line, that is the 25-day moving average. I'm not too worried about it acting as a strong technical level that would stop us from seeing the 10-year treasury yield drop. Remember, the 10-year treasury yield dropping is a good thing. We want to see it go down. When we look at mortgage-backed securities over here or the line chart, we want to see those go up. So far, so good. Things are looking pretty good on all of this. Today's rate sheet should be very similar to what we saw yesterday. Taking a look here, at Mortgage News Daily. There were a handful, probably 14 or 15 reprices better through the day yesterday as things improved. Lenders were pricing a little bit conservative in the morning. But, generally you're going to see rates today. They're going to be very similar to what we saw a little over a week ago. Some of the best rates that we've seen in about a week. It's better than the 3rd, better than the 31st, which should have been Friday, right? Yep, Friday. And here was Thursday, and here was Wednesday, and here was Tuesday, 727, Monday. So, we're seeing some of the best rates that we've seen since going back all the way to that 20th, 21st range of July. And that's why I say it is a good time to go ahead and consider locking some of those loans. If we do not see mortgage-backed securities improve this morning, right now, -9 basis points on the day. If we don't see improvement from there, then we're going to want to go ahead and consider locking some of those loans closing the next couple of weeks. Remember, it's Wednesday. We've got Friday's BLS jobs data. We don't know if we're going to see a bit of an odd reaction to that. We also are going to be looking at oil prices. Oil yesterday was falling below $80 a barrel for Brent crude. It's back up, but right at $80 a barrel. It's kind of flatlined, but things could worsen from here. So we're going to keep that in mind. Today, reprice risk on the day is low. If data comes out early, we've already gotten the ADP jobs data. And I'll talk about yesterday's JOLTS data as well. So 10-year Treasury yield slides a bit after weak ADP jobs data, weak data. And Ron Siegel has been pointing this out for a few days. The fact that we have seen some weaker on the weekly jobs data. We've seen it weakening over time. If you remember, Ron's pointed that out before. The 10-year Treasury note yield fell on Wednesday following a weaker than expected jobs reading from payroll processor ADP. Do they tell us what the number was created here? Actually, let's just click this and see if that takes us over to that article. Private companies added just 44,000 workers in July, below expectations. Now, I have to point out, as somebody struggling to use AI in my company, I very strongly feel most LOs should not worry about learning deep AI. Use AI for some of your simple day-to-day stuff, clean up some emails, give you some marketing ideas, come up with a flyer. I get that, right? However, you shouldn't be vibe coding. I stand strongly on that. You shouldn't be worried about trying to go deep in creating agents. And it's funny, I see a few real estate agents, a few mortgage people that talk about, all the stuff they're building. I can guarantee you that if we looked at their productivity, what they're not building is a pipeline. They want to be marketers. They want to be AI nerds. I get that. But your job as an originator is to originate. Your job as a loan officer is to get the deals across the finish line. And you don't need AI for most of that unless you are running a company, a broker shop, a bigger branch, that kind of a thing, and you've got it doing more. So for me, as a business owner, company owner, creating our products, Originator Success, Grab and Go Social, Rate Sensei, my team is using AI, and we are moving faster than we've ever been able to move before. Things that we would have to hire out, we no longer have to hire out. I can have my internal team build with the help of AI, with Claude Code, with ChatGPT work now, these different things. So to see private companies that are adding less workers, we are seeing an increase in office efficacy. We are seeing that, yes, AI is making it so less people can do more work. And I am definitely I'm not a communist. I believe in capitalism. However, big companies, large companies, corporate companies, a lot of them using ADP. Guess what? And I think we use ADP too. I use QuickBooks, but I don't know who actually send it, where the check would come from if they send a check. No, we use QuickBooks, so their payroll. So anyway, when we you look at this, there's less people that they're hiring because they're able to do more with the people that they have, and that means more profit, and that's what companies are going for. So this is not a sign of a weak economy. This is a sign of an upset in the way we do business that will continue to take effect. Now, what role does all that play in mortgage rates, all that stuff? That's what we want to definitely be looking at and paying attention to. Let's go through some of these headlines together. And let's take a look at where we're at. Let's take a look at your comments. So I want to go through, there's a few different headlines, and I'm probably going to clean up the way I do these in the future so we're a little tighter. So let's see. Hammer, you will change your messaging about AI when you start using it for production. I would share many items to improve my processes. I'd like to hear some of it. I mean, again, there is a role and a place, but a lot of times it's not that LOs shouldn't be using AI. They shouldn't be trying to build and master AI is what I feel very strongly. I see a lot of like build your own website. Anyway, I don't want to get that good on too far down the rabbit hole. Look up guidelines and cite references to an underwriter. Yeah, guess what? I could do that before AI. All right, so AI might, you think, make you faster to that? I don't know, man. It may find something quicker, but again, you don't need, that's not something that's going to take years to build, or months or weeks or hours to build, like that's something that you can just take a PDF, put it into of the guidelines, put it into ChatGPT and say, tell me about this. And then you go in and verify it. That stuff is fine, but that's not really what I'm talking about. Anyway, let's focus on kind of the main thing here and what we've got going on. So let me turn off that chat box. Where is it? Okay. All right. So taking a look here, we got the ADP report this morning. Again, showing a little bit of what could be argued to be weakness. This is not something that is going to bleed over into the BLS jobs data on Friday. So we don't want to make the mistake. Sorry, I'm just moving my camera a little bit. We don't want to make the mistake of thinking that this is, a precursor to Friday's data. Yesterday's JOLTS job opening labor turnover survey surged to No, this is the old article. Sorry, hold on. I want the new article and I'll show you the old. All right. So the job openings dropped in June and hiring increases. Job openings dropped in June amid a sharp decline in healthcare and social assistance, a rise in hiring and low layoffs suggested the labor market remains stable. Job openings, a measure of labor demand, had decreased by 178,000 to 7.359 million by the last day of June. And if we take a look at this one, the April surged to 7.6 million for jobs that were available, job openings. So there's a big difference between what we saw in June and what we saw in April. So keep that in mind, and where things jump to and where the direction of the market and all this stuff is going. Taking a look here, we talked about the ADP already. Oil prices moving higher after Yemen's Iran-backed Houthis claim Saudi tanker strike. So this is part of the reason why there's still concern and why you're seeing oil prices kind of hold steady. It's not the Strait of Hormuz, but it is south of that in the Red Sea, and it really affects Saudi Arabia the most. But look at this. If we see oil continue to move, it was at $80 a few minutes ago, now just a few pennies below that. But if we do see that happen, that could help mortgage-backed securities improve a little bit. But as you see, it's not necessarily a moment-by-moment direct correlation there. Taking a look here, let's hit the Fed for a minute. Kashkari says now is the time to start slowly moving rates up. He was one of the three dissensions at the last Fed meeting who said that they felt that it was time to hike the Fed funds rate. There were three of them. It was him, Logan, and I forget the other one. So anyway, it doesn't matter. But the bottom line, Kashkari's always been hawkish, and this is really not anything different. One thing they make kind of a big note on is he said to Kashkari, Warsh said to Kashkari, do what you think is the right thing to do for the economy. And Kashkari said, I appreciate that. In other words, he didn't feel that Warsh was going to come at them for voting the way that they actually felt to vote. So yesterday, we also got some manufacturing data. The ISM manufacturing showed that the inflation worries were worse than the pandemic era. A burst in factory activity shows the U.S. economy may be escaping the burden of tariffs, gaining manufacturing jobs while at the same time laboring under the geopolitical uncertainty, blah, blah, blah. This really didn't hurt us or help us yesterday. It really kind of got ignored in the whole thing of the noise. This is a good article, and this one is one we want to pay attention to. So when we're looking at Fed rate increases and expectation of Fed rate hikes, and right now in September, markets currently pricing in the idea that it's getting closer to a coin flip, about a 57% expectation that we will see a rate hike as early as the end of September the middle of September at the next meeting, September 16th. Markets pricing in the idea that we will have a Fed rate hike by the end of the year. Still 83%. That's broken up whether it's one or two hikes, but market's still expecting to see that. But when you take a look at an article like this, it points out as Warsh's Fed faces pressure to act on inflation, these indicators show it's at its lowest in years. This is the trimmed means that the Fed does. So pricing data from June indicated that outside of some select items, where costs continue to grow, inflation is trending back towards the Federal Reserve's inflation goal. Now, remember, some of the things that are currently suffering from inflation would have no benefit even if the Fed were to go ahead and hike the Fed funds rate. Like, I'm in the middle of buying some new computer hardware for the company, and a lot of that has to do with the use of AI and needing stronger. And number one, we can't get it for weeks and weeks and weeks. Number two, it's getting more and more expensive almost by the month. Month over month, we're seeing jumps in computer prices, chips, memory, all of that stuff that's tied to AI. That's driving costs up, and that is inflation. And you're going to see that whether the Fed hikes rates or not. Also, the labor market strength. The argument is that a stronger labor market means stronger wage inflation, but we really haven't seen wage inflation in quite a long time. The inflation that we're seeing is energy price inflation, things caused by what's going on over in the Middle East, that kind of a thing. We're not seeing wage inflation. So if the Fed starts to pay more attention to this rather than the PCE, the personal consumption expenditures, this could support the idea that the Fed is not going to hike rates and doesn't need to hike rates if you're looking at a different variable for what you want to judge where inflation is. The Dallas Fed's measure puts the 1-month annualized rate for June at just 1.4%, down a whopping 1.3 points from May and at its lowest level since November of 2020. The 12-month, the annual inflation rate, which Fed policymakers watch more closely, dipped to 2.2%, down 0.2 percentage points from a month ago to a bottom not seen since July of 2021. How it works: the trimmed mean inflation measures essentially act like a teacher grading a test on a curve. In the case of the Dallas measure, it tosses out 24% of the lower end price readings, 31% at the high end to come up with a better midpoint of where inflation is absent outliers. Now, that's quite a bit. You're talking a quarter and a third that you're knocking out. That's quite a bit. So that's the argument, is how accurate is that? But I mean, depending on what they want to use as their measuring stick, well, this is what we would see on how this would change. So anyway, let's just see if there's any other articles that need this. Yemen say they'll target tankers in the northern Red Sea. We've already talked about that. Trump fueling hopes Hormuz opening with hints a deal is close. Again, I give no stock in anything that Trump says, but yet markets will trade it anyway. So keep that in mind. When he says that a deal is close, or he hints that a deal is close, markets, it's like Lucy in the football. They know that he said it a dozen times, and sometimes it is, and a lot of times it's not. But yet at the same point, they're willing to trade it because they have FOMO and they don't want to risk missing out and seeing that. So again, just to wrap up for today, couple of different things. Number one, don't miss a moment of the show. If you joined late, make sure you sign up for our text reminders. I'm going back to sending them out as I go live. So when you get that text, you're going to want to jump right in. Make sure that you get in. You get about 2 or 3 minutes at the beginning of the show before we get into the meat of it. Otherwise, did anyone miss the actual meat of the show this morning? Please let me know in the comments, yes or no. Give me a thumbs up, thumbs down. Give me something to let me know what's going on. Yasmin, I see you on there, by the way. Talking with Danielle, we're very frustrated with our billing engine. I know you had some issues about that. Anyone else that maybe, especially if you're on the text alert service, we've had issues with the billing engine where it's auto retrying cards within minutes instead of days. Automation is a beautiful thing when it works. So anyway, let me know if you guys are jumping in and getting the meat of the show or not. Also, don't forget to sign up for our email lock advice, www.ratelockadvice.com, our text alerts at ratetextalerts.com. So, all right, my friends, I am going to go ahead and use this opportunity to jump out early. Let's go ahead and get this wrapped up on the day. Got to get rid of that little technicals thing there. All right. Here is your lock advice. I'll post it one more time. Lock advice at a glance. Right. And let me get rid of the, there you go. So there is your lock advice at a glance. Sean, grabandgosocial.com. Meet, like the quick start. Your billing engine sucks. Yeah, dude. What do you want me to tell you, man? I've used Infusionsoft for 16 years. And they got bought by a company called Thrive, public company. The problem is we're a victim of our own success. I looked at moving, but due to security and the way that the credit cards are tokenized, meaning we don't actually store credit card data. The credit card is tokened, so it can't be stolen and used somewhere else, right? And then moving those tokens, we have over 1,500 subscriptions that we would have to move. And unfortunately, it's not easy to do that. So we're looking at options and looking at things to improve it. And that didn't used to give us problems, but it does now. Very frustrating, very frustrating. Yep, Ron said the SMS came in after I started. But did you miss the start or did you miss the meat of it? Like, where we get into because we run like 2 minutes of filler. There's a minute countdown. And then I get on and talk about myself, blah, 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 and all that stuff. And then that's another minute. I usually wait until 2.5 minutes to jump in. So you should be getting the text in there. Holly said good for her. All right, cool. Sean said the 2 to 3 minute opening is your favorite part. That and Ron Single telling you what day it is. Yes, I will go back to Ron telling us what day it is. Sophia's like, why do you sound like Eddie? Yeah. So I say work like a cat day. It's better. All right, my friends, I'm going to wrap it up. Thanks again for joining me. I will see y'all tomorrow. Make it a great one. Bye-bye. I will call you, Ron. Do you want me to call you now?